The National Investor's motto is, you can get information anywhere, but here you get knowledge. And for well over 40 years now, Chris Temple has imparted that knowledge, an unparalleled, understandable, and useful take on the big picture of the markets and of our world. He has been out in front of what you see on the news every day on many themes. More, Chris has taken this macro knowledge and his unique analytical abilities to uncover unique investment opportunities. Often, he has guided his members to big winners in resources, biotech stocks, and more. His talents and connections often getting him into ground floor opportunities before they are discovered. Without further ado, here is Chris with today's topic.
Welcome back, everybody, and happy midsummer. We all hope you're enjoying your time in the summery time of the year. We're starting on the downhill side now as we're closing the book on the first week of August. With me, as we promised a few weeks ago, in just a minute, you're going to meet Terry Lynch once more. He's a CEO of Power Metallic Mines, a great exploration story. I interviewed him specifically on Power Metallic a few weeks ago. The link to that is among others that we'll be talking about in the notes to this video and or audio, depending on where you're watching this. But today we're going to take a higher level view, as we promised a few weeks ago. We're going to look at the overall landscape of commodities, particularly commodities in Canada. We're going to look at the regulatory things going on up there. You know, we've got a lot going on here in the US with permitting reform and a lot of aggressive, in some instances, government actions in the recent past to try and reinvigorate supply chains all the way upstream and downstream on a lot of things that we became over the years way too dependent on foreign imports for. Canada is less bad in some of those respects because it proportionally has got a much bigger part of its economy, both now as well as potentially centered around natural resources, more so than the US. But anyway, we're going to look at all that stuff. We're going to look at the policy landscape in Canada. We're going to look, as we also mentioned a few weeks ago, at Terry's labor of love, one of his causes over the organization Save Canadian Mining, and bring you up to date on what is going on policy-wise with securities regulators in Canada to take one of the big kind of albatrosses from around the neck of the mining industry in Canada, and that has been an ongoing practice of some nefarious activities. Some call it naked short selling. There's front running of things and whatnot, but it's made a bad situation worse over the years. That's the reason why a lot of people were, not that long ago, before we saw resources perk up in the recent past, led of course by gold and now by uranium. But it's why a lot of people were saying that there might not be, for example, the Toronto Venture Exchange too much longer, because you look at this chart right here and it's been a horror show for a lot of years. But it didn't start from a place of shenanigans in the brokerage industry. It started from, and we know this story in the US as well, and it's been repeated much of the world over, that commodities for a long time really have not been in a story that most investors were interested in. There's been too much fun to be had with AI stocks and cryptocurrencies and now stable coins and chips and all the rest of this kind of thing. And so commodities have had also ran status. There have been glimmers, of course, when we saw back in 2022 at the beginning of the proxy war with Russia over Ukraine, we saw energy spike, uranium spiked finally, and has been in a nice bullish run that's consolidated for the last year and a half and getting ready to take off again. We've seen gold, of course, hit record high after record high in 2025, finally dragging silver along with it, etc. But up until then, of course, it's been kind of slim pickings, you know, for the commodity stocks out there, which have had historical undervaluations, as you also see here, versus financial assets and the overall size of financial markets, et cetera. But what happened along the way is that when commodities weren't a big deal and investors didn't care about them, that made a bad situation worse, because both in the US and in Canada, a lot of investment houses that previously had a certain amount of bandwidth, whether it was through analysts or financings that they would do or so forth toward natural resource ideas, they started cutting back on all of that, even to the point where in Canada, there's a fraction of the number of full-time analysts and people who follow energy and metals and whatnot compared to 10 or 20 years ago. And that in turn led to some of the practices that Save Canadian Mining has been out to try and take the sheet off of, so to speak, of where, and it happens when companies do financings, it happens in the market otherwise, but through front running of offerings, and a lot of you have seen this, I'm sure, from time to time, where a company announces a private placement and it ends up in a worse position, share price wise and whatnot, than before it started. That's not always an accident. Same thing when you have a lot of naked shorting going on. Just today, before getting on this call with Terry, I was talking to a CEO who gave me chapter and verse of exactly what happened to his company in the recent past over an offering that was tentatively going to be done by one of the higher profile names. If I mention him, you'd certainly recognize it in Canada. He ended up pulling the plug on that. A lot of people who smelled this thing coming and had shorted the stock had to quickly scramble and cover. So a lot of this stuff still needs to be cleaned up in Canada. I happen to believe, and I'll ask Terry his opinion on this, that as commodities themes grow and investors come back to this space, and then the analysts, fundamental analysts come back to this space, this is going to die. These practices of shorting these stocks and keeping the market depressed is going to die its own death. And a lot of people who overstay their welcome there are going to end up getting run over, like we've seen in the recent past here in the US, when activist investors just talking on chat rooms find a stock that's got a big short interest and say, hey, let's teach the shorts a lesson. And they blow them all out of it and cause huge short squeezes and huge spikes in share prices of companies that they target. So I think we're turning the corner, and it's going to be slow, it's going to be methodical, but we're going in the right direction. We're turning a corner from a time that commodities were also rans, they were out of favor. All of these shenanigans in the marketplaces made the bad situation worse, made it even harder for companies to raise money. That's been changing for a while now, especially for the better companies with the better exploration stories. It's not that difficult if you've got something that deserves it to raise money all of a sudden. And now you've got some generalist investors starting to come back on board. And then, of course, the final thing to come along, of course, with some government permitting reform and so forth to make these industries healthier again, is going to be when the regulators finally crack down on this kind of thing. So we are in a very, very, very early innings. And I think when you add all of these things together, we're going to have a rip-roaring bull market for years on most commodities, for a lot of the reasons that you've already heard about from us, that you're going to be hearing about, and so forth. So real quick before I bring Terry on, even though we're not talking specifically about power metallic today, we probably will make a comment or two that might reflect on them. So here again, as we did before, their disclaimer slide, if you will, on forward-looking statements. He and I might be making some forward-looking statements that would impact directly or indirectly power metallic. So just be mindful of that. All right, and here is my good friend Terry Lynch back again, just a few weeks after we talked about power metallic. And as a reminder, of course, the link to that particular discussion is in the notes here, but we're going to get into the subjects that I highlighted before he came on. Terry, thanks for taking the time again.
Chris, always my pleasure to talk to you and your group.
Well, a lot of us have been pining for years for this long-awaited secular bull market for commodities, and it's been trying to get going in fits and starts and here and there for the last few years. But it's got a new strategic and political impulse to it, I think globally in one context, and in the context we're going to focus on most today, in the context of Canadian resource mining energy companies. You live in a country that is blessed with a greater endowment of raw materials in proportion to the overall economy than most countries on the face of the earth. There aren't many that rival Canada. And for a long time, as we've all talked and experienced for years, particularly under the last federal government you had up in Canada, a lot of that was kind of left in the ground. There was not a friendly helping hand from government to exploit most of these resources. Now the game has changed, and I want to talk about this from a couple angles. First of all, from the big orange elephant in the room, as I like to put it. President Trump has not been kind, rhetorically at least, to Canada. I think behind the scenes things are potentially less bad than all of the bluster and bravado. But I want your take, first of all, on a big picture of how people in your position as a mining company executive see things in Canada when I think President Trump, if nothing else, has given your country a wake-up call to say, hey, we really need to build out these resources, not just for the country that has been our biggest customer to date, but for a world that needs these things. Well, how do you see it?
Yeah, listen. Canada needed a wake-up call. Whether we wanted it exactly the way President Trump delivered it would be very, very debatable. But nonetheless, that's what happens in the real world. When you get weak, people can give you shots, and you have to absorb them. And Canada's been weak, unfortunately, and it's really appalling that we let ourselves get that way, because there's no real reason on earth that we shouldn't be just rocking the free world. We've got everything. It's an embarrassment of riches, really. But here we are. We've sort of got to first recognize where you're at in life, and then sort of move forward. So I would say that the wake up call has been received. You'll hear the usual bitching and moaning in the newspapers and the social media and stuff like that. But behind the scenes, the governments have woken up and realized, wow, we really got to get our act together. I was in Ottawa just a couple of weeks ago to meet with the various federal ministers and deputy ministers, assistant deputy ministers, PMO office, this type of thing, just about our project in Quebec and what we're doing there, and how they could help us to policy wise, just in terms of moving forward. And I would say, generally speaking, these guys, the new government gets it. I believe that they're going to be much more business friendly than the last. And I don't know the motivation. I think some part desperation, some part reality. But I also think they're obviously, Prime Minister Carney and the Natural Resource Minister are businessmen. They come from business. They understand the business practicalities, shall we say, much more than, say, the previous prime minister did, who had no background at all, really. So I think that's a positive. We've got a broad backdrop of the commodity. We're not in a roaring commodities bull market yet, but we're in a top 25% quartile, top quartile of a commodities bull market. So it's trending that way. It's going to happen. So I think there's good macro feels to it. And I think that if you think about the critical mineral conversation that it's now making it to the president and prime minister level, the people are talking about mining. I mean, when's the last time that's happened? Not in my lifetime that I can recall. So that's a good thing, So finally, people are realizing, holy crap, we're about to run out of a lot of stuff, or our theoretical guys that are not on our good list, Russia, China, etc., are in control of these things. I mean, the geopolitical footballs are what they are. At the end of the day, I'm sort of why can't we all get along? We got to compete and do whatever, but nobody wants to have a war, really, and everyone just wants the best for their citizens, I think.
Right.
So but I think that one thing is clear. The world has shifted into much more focused locally as opposed to globally. So I think I wrote a piece called Fortress America, a while back at the Critical Mineral Symposium. And I talked about, America really setting up, where obviously the USA is the core, but I see Canada and Mexico as being part of the fence posts in this system. And we need to figure out how to integrate within that. And I think that's what's on our mind right now as a nation, is to how do we fit in. And of course, President Trump is trying to negotiate the best deal he possibly can for Americans, and I get that. That's what he's been hired to do. We've got to sort of do what we can do to make sure it's workable in the long run, because I always believe a business deal has to work for both sides for it to work. And so having a weak Canada isn't a positive thing for President Trump. Yet it's fair to say that Canada has probably taken advantage of the American protection and done a lot of underinvestment in defense and stuff like that we need to clean up. So I think there's things that we needed to do and have to do and probably will do as a result of this wake up call. And then the other thing we should do is, hey, never in any business, it's like when I'm raising money, I never want to have just one source of capital, because
Sure.
then that guy's going to dictate my terms, right? I need to have a lot of sources of capital, create a bit of a competitive environment so I can get the best deal for my shareholders. Same way for any country. We've got some very prized commodities, and America's not the only customer. And it's like, hey, they're probably our best customer. They're our most logical customer. And let's hope we can do a lot more business with them. And I think that's ultimately where it goes. But we should also exploit and explore other opportunities to do business with the Europeans, with everyone else, the Indians, the Chinese, the Russians. I mean, nobody should be off the table. Business is business,
Yeah.
in my view. And it's like, it makes sense. But I think, it's that concept of good fences make good neighbors. The competition makes good neighbors as well. So
I
it's like
agree.
by creating competition, we'll get fair prices for our commodities and perhaps access for some of our other products. So
Well, to Canada's credit, it was only a few weeks ago that the first shipments of compressed natural gas left Kitimat, BC, and headed to Asia. There's three other projects in the works, and I think that what I heard from my friend Des O'Kell with Enterprise Group, I'm going to add the link for the specific look at Canadians' energy industry to this notes as well. A third of your natural gas production is going to be exported within the next 5 years to somebody other than the U.S., and that's great.
Which is fantastic and long overdue. And
Very
it's
much.
one of our biggest lost opportunities when the Germans came begging for Canadian gas, and Trudeau fumbled the ball there completely, unfortunately, and didn't do it. But let's not, let's continue to do that, because we've got an abundance of natural gas, and it's a clean fuel source.
Yeah.
So why not use?
Yeah. And you've got an industry too that is not nearly as mature in oil and gas as most of the U.S. fields are. And so I know that there's a lot of eyes on the Canadian oil patch right now from U.S. companies that are looking to branch out. And so I agree with what you said a minute ago, Terry. I have no doubt that President Trump deep down has a vision for what I was pining for even before he got back into the White House. And I said that with all the things of going local, globalization unraveling, moving to a multipolar world, he needs to dust off the Monroe Doctrine and
Yeah.
do it fairly, do it profitably for everybody involved. And I think that deep down is where he wants to go. And again, notwithstanding the bluster and everything and brickbats back and forth for public consumption, that's where we're going to go. I want to move on to, and you and I talked briefly about a new article that was just put in the Canadian Mining Journal. And folks, I'll have a link to that article too in the notes. And I want your take on this because it kind of gives a glass half full picture. I think that the government up there under Carney is looking at infrastructure. They very definitely are looking at trying to build up as one of the top priorities energy exports. When it comes to mining and critical metals, I think it's still tilted a little bit toward the whole green agenda. I don't see that the government yet, as an industry, wants to say, okay, we're going to support mining overall, be it for gold, copper, nickel, lithium, whatever. I think that that's where things are going, and it's definitely going to be a better environment. But do you see any truth in that Canadian Mining Journal article that it's still kind of tilted toward the green agenda?
Yeah, I believe that's the case. Now the I guess the good part about it is that almost, I mean, there obviously gold to the most part. There's obviously a number of gold exploration stories in Canada that are strictly gold focused, but more than half are associated with copper. There's always a base metal in there, even sometimes nickel. So
Yeah.
so I think the benefits of that is, even ourselves, like you look at Power Metallic.
Yeah.
we're obviously we're about the line zone is about 45% copper and about 55% precious metals. 40% PGEs and 10% gold, 5% silver. So now a lot of those, even the palladium, platinum are critical minerals.
Yeah.
In terms of the critical calculation. So we qualify as a critical mineral discovery. But we are 45, 55. Most people don't get that. They think that we're mostly base metals. But so I think there's a lot about positioning and just how you position yourself as a company.
Sure.
So, but generally, look, the government's made a big to-do, previous Liberal governments, about, the green economy, blah, blah, blah. So, they're not going to give that up, completely. But the reality of the actual structure is that it is very supportive to mining development overall. It's more supportive to the critical minerals. But a lot of the mines qualify is my point, and so I don't think honestly government is the reason why Canada's mining sector is not booming right now. And I'm the first guy to blame government on most things, especially the Canadian government. But I'd have to say that no, I don't see them as the bad guys in the room. But for this, I think that our biggest problem in Canada is our capital markets, and I've been saying that for forever. We've tried, we've tried, and we're still trying to get some changes to the Canadian capital markets. I mean, we only have to look at the pure facts of last year. We raised $20 billion as a country across every form of our economy. That's ridiculous. The U.S. will raise that in a good week in Wall Street.
Pretty much.
One company, and so we used to raise $100 billion all the time. That's not a sign of a healthy country when your equity markets are not producing. It's not that the money's not there. There's money in Canada, and there's investors that would be interested in investing in the Canadian markets, given the right opportunities. But our capital markets are broken. They've been broken by poor regulatory oversight and perhaps some sort of, I think one of the huge benefits that the current administration in Ottawa could take advantage of with the orange shock, as we call it, is to use that as a catalyst to go into these areas of provincial concern, like securities regulations, and say, guys, we need to have a competitive capital markets to face the challenges of our future, which is very self-evident now.
Yeah.
And our current policies are not working. It's not what we can see that there's been a lot of malfeasance, and a lot of as a result, the confidence in Canadian capital markets is at an all-time low globally. It's a national security issue now. National security is a federal jurisdiction. Capital securities are not. But national security oversees that, and I think they need to use that weapon to go into the provinces and say, hey, we need a national security regulator, or we need to do something to fix our security system so we can stop the abuses that are happening, so our companies can raise capital in a fair way, our investors get a fair shot at things, so that if companies have a discovery, they get rewarded. That's how capitalism is supposed to work.
Yeah.
And if we could change that, we can access a ton of capital for our, not only just our mining sector, but across the board, and that would lead to a real boom, and the country could use it, of course.
Right.
And I think that's what government could do and that's what I told the PMO's office. I said, if you guys want to fix things, I wrote an article, and I'll give you the link to it. This thing on X. I talked about the cod fishery. I grew up in the Maritimes. I'm a Nova Scotia boy. So back in the day when the cod fishery died, that was a huge impact, mostly to Newfoundland, but also to Nova Scotia, as many fishermen lost their livelihoods like overnight. Well, what happened? Well, you know what? I mean, what happened is we allowed overfishing. It's like nobody protected this thing.
Right.
And it's like eventually you just ate it to death. They killed the industry. And then it's like the cod's never coming back. It'll take generations. And my point was, that's what's happened to Canadian capital markets. Okay, it didn't happen overnight, but over time, this thing has been just crushed. And it's like, boys, if we don't wake up soon, we're going to be talking about this in the same light. You know what I mean? There was a call from CIRO, our national regulator, for they actually put out a very good proposal, which if it was actually applied properly and without loopholes, then that would be my one thing with Zero is they always leave too many loopholes for the bad guys. But let's assume that they could actually execute this one properly. It's called basically delivery in one day. And it's supposed to, when you transact in a stock in Canada, I believe in the US as well, you have to basically cover in one day. So you have to deliver your stock or your cash in the day. One day, boom. Now, the failures to deliver basically is what drives the short market. Okay, in our stock, over 50% of our shares don't get delivered after one day. Okay, that's just a giant red flag. Why is that happening? Okay, but it happens across the board to a lot of stocks. If they could fix that one problem where they enforce delivery, okay, that would go a long way to healing the system. That will deal with the short issues because they will be forced to deliver. And so we at Save Canadian Mining, an organization I started with a group of people like Eric Sprott, Rob McEwen, and many others, Keith Newmeyer, etc., Sean Rusin, and we basically had pushed the government to say, hey, make everyone deliver at once, okay, like the Zero regulation. And so we supported this regulation reform by Zero that it's out for comment. Every single bank, every single investment bank, and they're all saying everything is rosy. We don't need this for this reason or that reason. Complete bullshit. I'm calling these guys out. I'm just saying that's bullshit. You guys are addicted to short-term profits, and you're going to make us go the way of the cod fishery. You're going to kill us. And that's
and the securities industry, you're exactly right, up there is doing the same thing as a fisherman did. I alluded to this before you came on, and I want to share this anecdote now since we're on the Save Canadian Mining subject. You know, you guys started this cause a while back, and it was over 10, 12 years ago. The regulators changed the tick rule to basically allow you to short stocks you don't even own. And as I said before you came on, this has added to the vicious cycle of, you know, you've got underinvestment in commodities that causes Bay Street and, you know, Wall Street, even down here where commodities are concerned. You get rid of analysts, you have less attention, less money for it, and it creates more of a vacuum. So you've got thin markets, and these shysters out there have exploited that to be able to play all kinds of games and harm the industry even more. I'm going to tell you, you'll know perhaps who I'm talking about when I share this anecdote. We'll have to talk about it specifically off the air later. But just before I talk with you, literally just before I talk with you, I was talking with the CEO of a company, very, very successful, major discovery here in the US in the last couple of years. And this CEO knows you, knows what you're doing. You know who it is if I mention his name. And he said when he first heard, you know, your dog and pony show, you guys about the Safe Canadian Mining and how naked shorting was hurting everything, he was a little skeptical. And he actually hired a guy whose job is to monitor all of their volume every day and figure out, even if it's labeled anonymous, where it is, where it's coming from, and so forth. And in this guy's case, he said 90% of our volume we can account for. But recently, he was in talks with one of the higher profile Canadian investment houses. You'd know this name, and everybody listening would if I mention them. And he was talking to them about doing a raise, and they gave him a few parameters. But all of a sudden, when it looked as though he was close to pulling the trigger, the stock starts to get shorted and go down. And now you're looking at where the volume, he says now 80% of the volume we can't account for because we haven't even done this raise yet. Okay. So before he pulls the trigger with this investment house, a major mining company that's already a shareholder and has a stake in neighboring projects to this guy's project says, hey, you know, we want to drive this bus more so. And so long story short, Terry, this guy decides to set up an offering with this big mining company as a lead investor, goes away from this investment bank. And all of a sudden, when that gets announced and the investment house learned that they're not getting the business, he said that the first day after that, there were market orders for 500,000 shares that caused the stock to gap up like 20% at the open because all these people that got too cute and shorted this stock before it even came out, oh boy, now we got to cover our rear ends. And this goes on all the time.
This goes on all the time, and yeah, again, like it's not unusual. We've dealt with a skepticism, and I was a skeptic myself when I first heard it, but then we actually did the math,
Well, this
did the
guy's not
research.
anymore. I'll tell you that. Neither is the guy he
Yeah,
had babysitting his trades, who was a
yeah,
skeptic. He said, oh boy, this guy's right.
yeah. No, it's the truth. Unfortunately, it's a sad truth,
Well,
and
so
it's like,
let me ask you this, Terry, because and I may have asked you this before. I read this was several months ago. I still call them IROC, whatever the hell they call themselves now, the
yeah,
new acronym, but the major securities regulators in Canada. They came out with a proposal that I thought on the surface sounded pretty good. And it's kind of like here in the US, under US securities law, you've got a standard called Know Your Customer. And if you're a broker or FINRA regulated broker dealer in the US and you've got some 80-year-old lady that doesn't have a lot of savings and you put half her portfolio in penny stocks, it's your butt that's on the line if
yeah,
they don't do well and she decides to make a complaint. It's because of suitability. A
yeah.
responsible broker would never do that to that kind of a client. And so it's a know your customer rule, and it puts the monkey somewhat on the back of the broker. Is that a legit proposal up there, or do they need to do something else?
Listen,
I mean, look, because if the
I don't.
brokers are the ones enabling these naked shorts, they should know better and they should be accountable.
Yeah, so here's my understanding of who enables the naked shorts. Basically, it's all done through this short market exempt. Uh,
Okay.
so if you're a hedge fund and you deal pipe to pipe, i.e., computer to computer, with your broker, whoever that broker might be, the big three in our country are CIBC, TD, and Merrill Lynch. Uh, those are the big three on the pipe to pipe trade. So they basically anybody that has access to that service automatically has what's called a short market exempt status. That's something that market makers have to make markets, on either side. Now, with market makers, they're actually regulated by CIRO, the inheritor of the IROC name.
Right.
That's the new regulatory name,
Zero,
CIRO.
that's right.
And that's not zero, it's zero. But they do a good job of regulating those guys. They get monitored, and the market makers get monitored. They do a very bad job of regulating the institutions, the hedge funds that have this
Hmm.
SME. As far as I know, it's an unregulated situation. This is what they told me, because I wrote zero on this when I learned of this. I don't know, maybe a year ago or 8 months ago or 10 months ago, and I was like, can't be. But somebody, a trader, said it was this way, and I thought, okay, I'm going to ask. So I asked zero, and they're good enough to get back to me. They know that I've obviously got a bit of a pulpit, and I'm not afraid to get out there and call them out. And so they did get back to me, which is fair enough. And they said, no, here's the rule. The rule is that approximately 90% of the time, which one would have to interpret it this way, that would, in my mind, mean 85.01% of the time is approximately 90%. Okay. So 14.99% of the time, any of these hedge funds can be 100% of the market.
Wow.
Okay. But the rest of the time, they can only be 5% of the market. Theoretically, they're not supposed to move the market any particular way, but nobody oversees it. And so you get six of these guys together, they can be all the market every day. And that's why you'll see stocks that trade, like there's no available borrow. I mean, many of these penny stocks don't even, like, who's borrowing these stocks? Who's lending these stocks?
Right.
I mean, this is not something you typically borrow. So all this stuff is really manufactured. And pretty learned people, PhDs of from Columbia and places like this, have done serious deep dives in this. Say 30% of the float on all these companies is a naked short across
Good
the board.
grief.
That's a number, and in many instances, there's several 100%, and that's when you get into the GameStop situations and the QNTMs and these other ones that are happening now, Genius Brands and stuff like that. And I suspect at the end of the day, there will be some pain suffered by these guys, and they deserve pain. And when I was talking with the PMO, I said, guys, at the end of these shorts, one thing we can say about them is they are the smartest guys in the room. They're making the most money.
Yeah.
They've got the best people. They got the best programming. They are not stupid people. Okay.
No.
And honestly, in Canada, I'm not even convinced they're committing illegal action on the shorting. Spoofing, yes, that's illegal, and they do that, and they should be harshly punished for that. That's another story.
Right.
But the naked shorting, I believe it's not illegal the way it's currently handled. So it's like, hey, is it immoral? For sure. But it's not for me, that's for God to judge on the morality side of things. If it's not illegal, hey, listen, it's not what I would do, but others have chosen to do it. That's the system needs to change that, makes it illegal. But if we actually change the system and we made them cover their trades at the end of the day, whether you had a short market exempt or not, this thing would clean up in a hurry.
Oh, sure.
And I'll tell you what, those short players would go from being the short side to be on the long side real quick, because it also recognized, okay, the game has changed. We're shooting fish in the barrel with almost no risk. And they're in the business of making money with asymmetric returns. That's their business. And they're doing very well at it, by the way. And now but if the games have changed, if the government would actually enforce this, they would quickly realize, hey, we got to get to the other side. And this thing would turn around like crazy. I believe that turnaround is coming, because I believe their days are like, we now have identified the problem. Greater forces than Safe Canadian Mining are realizing this is a big issue.
Yeah.
I mean, I think, look at our country raised $20 billion. Holy crap. This is like 4-alarm fire. Like even the feds have recognized that. So I think there's going to be change, and that will lead to a crazy bull market.
I think it will. And, I think the fundamentals alone, when it's no longer fundamentally sound to short out of favor commodities, because now they're not out of favor. Now they're national imperatives, number one. And I think where you're going to have an advantage too, Terry, and maybe this is an angle that you and others should be telling to everybody in Ottawa. Look at what the Trump administration is doing in the U.S. And there's a lot of things the president does I think are great. There's a lot of things I think he's nuts. But the fact is, and it's true for the U.S., it's true for Canada, it's true for the whole world, we are all choking on piles of debt, a lot of which came about in the recent past under Biden in this country and under Trudeau up there, with nothing useful and productive to show for it.
Agreed.
Just adding to the debt without expanding the tax base. And for all of his faults, President Trump knows he needs to drastically expand the tax base by drastically expanding the economy, by juicing investment markets so there's enough activity, enough profits being generated to hopefully make managing the debt easier going forward. And I think that's where you're hopefully, fingers crossed, going to have an advantage with Prime Minister Carney, is that he's not whatever the hell Trudeau was, qualified him to sell hot dogs out of the street, but not to be Prime Minister. At least in Carney's case, he's got an investment banking background and he knows how this stuff works. He knows how the world works. He's been a central bank head, twice? And so, I think that he needs to be sold this idea in the way of we shouldn't be raising 20 billion a year. We should add a zero or more to that because there's the assets in that country that justify it. And if you do that, and if you get these things going, then for Canada as well, that's going to be a lot easier to handle.
100%. I mean, that is the practical reality of it, and let's hope that that they come to this realization. I pray.
So bottom line, Terry, with Save Canadian Mining, I think more and more people are understanding that you guys have been correct all along and that this is a problem. And as you said, even if it's not technically illegal, it's wrecking the country, it's wrecking the mining industry, and it's keeping a lot of things hobbled that shouldn't be hobbled.
Yeah, that's the case. So we're about to probably expand Save Canadian Mining to Save Canadian Markets. Broaden it a little bit to be more appealing and to be allow us to secure support from various other sectors that are being punished, like oil and gas and tech and biotech, etc.
Right,
and really make it more of a broad stream approach.
That's great.
And we're very close to getting a really killer management team in place to run the program on a day-to-day basis. I'll step back and just be chairman of the board type of thing with a really great group of board members to support this initiative. And we'll have somebody whose job it is day to day to take this message to the press, to the social media, to the governments, and pound away and hopefully get the meaningful changes the country so desperately needs.
That's
That's what we're
great.
hoping.
That's awesome news. Let me hit one more thing that we didn't really talk a lot about yet before we end for at least this particular moment. Prime Minister Carney, during the campaign and since, has had this moniker, I think, of one project, one review, or some such thing. And it's discussed somewhat in that Canadian Mining Journal article that I'm providing you all the link to with this discussion. Permitting reform is important, obviously, in the U.S. and Canada both. There's a lot of that going on. The economics need to follow behind it, and other policies to strengthen the food chain from upstream to downstream, et cetera. How serious do you think the Prime Minister is on trying to remove the federal government from where it can be removed?
I believe they're very serious on that. I think they're when I was in Ottawa and talking to the various ministries and then talking to our government consultants, government relations people, they said they felt this was the most engaged government they've seen in their tenure in Ottawa, and they were 30-year type, very experienced GR people. So I think what's happening is the feds are engaging with the province on a meaningful basis to say, hey, how do we do things better? Mm-hmm. And I think that's really good. So it's like obviously the critical minerals is one. They're trying to get out of the way as much as possible, like have one environmental review as opposed to two. It makes sense, right? As long as the things are covered, why do we have to do it twice? Stuff doesn't make sense. But there's a lot of stuff in government that doesn't make sense. So that doesn't all common sense doesn't rule, right? But I think there's a focus on doing that. I also think that they're focused, and well intentioned to deliver a more comprehensive First Nations approach, where they're going to be much more proactive with the First Nations on removing that as a roadblock to development in a way that's beneficial and in cooperation with the First Nations, because I think that's another important roadblock here in our country. But it doesn't have to be a roadblock. We have a great relation with the James Bay Cree. They're our First Nations partner on our project, and we talk with them all the time, and we're working with them, and we see them as partners, and we hope to move that further along. And I think that needs to be the tone. Is that listen, they're part of the mosaic, and they're not negative towards development. They have their own concerns, and we need to be able to address them in a forthright way. And it's possible in these projects to do that. And everyone needs to get on the same page. How do we create a better mousetrap? Rob McEwen did an amazing job. I don't know if you've seen his video on his Argentinian copper project.
Oh, yes.
So very forward thinking about what a mine could be like in the future. So it doesn't have to be like a dirty, dusty concrete banger smasher, horrible place. In fact, Rob sort of reimagined it. I thought it was genius about how it basically turning it into almost like a resort-like destination where they could do high Andes exploration, capture all of his own water, grow all of their own food. And obviously, like I showed this to James Bay Cree, and I said, look, it's going to be completely different here because obviously we don't have those issues that they have down there. We have here, but we have other things here. Like, for example, like in Nemaska, in the local grocery store there, because of supply and demand dynamics, the produce sucks. Okay, what I mean? It's just not. And of course, they're one of their big objectives is they want to, have the James Bay community be much more responsive in terms of people staying at home, young people being able to get good jobs and living in the community, and just fostering their own community growth. Well, one of the things that works against that is, hey, these guys get out. They're like normal people. They travel and they see good, healthy food elsewhere, and they like it. Why wouldn't they? Of course, we all like good, healthy food. I'm saying, look, as part of this mine that we all need to build. Let's build a bloody great greenhouse complex that can service not just our miners, but also the community. It's not
Sure.
going to cost us a whole lot more, but that would be a profoundly impactful, practical thing. And that's just one, I mean,
Yeah.
there's all sorts of other things we could do, but it's about common sense stuff like that, really. And it's like I find the First Nations very common sense when you actually talk to them
Yep.
man to man. It's very they just want to improve their community, improve their citizens, lot in life. That's a valid
Well, and they
objective,
and they
we should.
realize, I think, more and more, Terry, like the rest of us do, that commodities going forward are in ever more demand. You've got parts of the world that are trying to industrialize or reindustrialize. You've still got 2.5 billion people on this planet can't even flip a light switch. And some of the
Yeah,
minerals and metals that you're going to mine up there and we're going to mine here in the US can help to fix that. I think it's the Niska Nation, isn't it, in BC, that's actually got their own royalty company now.
yeah,
They
yeah,
did
yeah.
it. I mean, they're
They,
partners in
they,
a
that,
few different
yeah,
projects.
no, and they're smart guys. They actually, remember, was it trying to remember the public company? It's Seabridge, yeah.
Yeah,
Seabridge has got a big project, and they actually stopped it for a while, the Niska, but for good reasons. And then Seabridge, did a bright thing. They actually got to the Niska, met with them, worked it through with them, and now
yeah,
they're partners.
that's right.
That's the recipe, right? And that we need more of that.
Yeah.
We absolutely need more of that. And I think that's something that we'll see more of. And I think the feds are going to do their part to try and help encourage that. Encourage more investment. By the First Nations, maybe by supporting it, which I think will be productive. And I think that'll go a long ways to expediting the permitting thing, because if the community stuff is sort of integrated into the process, where the community is sort of hey, they have issues that they want to have addressed to make sure that their watershed is not being ruined, or the various
Sure.
practical stuff that everyone wants to do anyway. That these things can move a lot quicker, and I think that's where the government can be helpful. But for me, it's permitting is number two, capital markets is number one.
Right. Right. And hopefully these initial signs that both of those are going to get fixed for the better will continue to bear more fruit in the days ahead, not only for your
Yeah,
Canada,
yeah,
but down
I,
here in the
I think
US.
so. I think so. I mean, generally, obviously, your audiences tunes in for investment ideas and whatnot, and obviously, I know you're in the mineral space. It is a good time to be
Yeah.
investing in minerals, and like I say to people that ask me, I said, look, if you can't stomach investing in individual mining stocks because the stock charts suck, because generally most of them do suck in our space. There's
Right.
a few exceptions, but and buy the funds. Buy. There's a lot of great mining funds out there. Whether it be 1832 or Palace Capital or BT Global, McKinsey, Crescat. There's a lot of great funds out
Sure.
there that they could get into, and their fund managers are very sharp, very wise. They know where to invest, and then once they get in, they'll start to get educated and realize, hey, maybe I can actually now start to tiptoe into some of these deals that maybe, because people's mindset on mining stocks has to be different. You can't approach it like you're buying, Tesla or
No,
Nvidia or something like that, because
not now
those
anyway.
tremendous liquidity and volatility, and they can trade them in cycles. In mining stocks, you can't. Mining stocks are an investment, not a trade.
Right.
Is number one thing. If you're looking to trade, do not be trading mining stocks. If you're looking to make an investment, mining stocks are great because you can buy out of favor mining stocks that actually have legit. Your due diligence can tell you that has legitimate resources in the ground, has a management team that can actually execute, and has a clear pathway to becoming a mine, and know that over time there'll be a multiple. I'm talking 5x, 10x, potentially
Sure.
100x return in these deals, but you got to be patient. I can't predict, and nobody can, if it's going to happen tomorrow or in 2 months or whatever. But if you're making 5 times your money in 18 months, is that really a big deal? It shouldn't be. If you say yes, it is, well, it's like, you're not really a good investor. You need to sort of go back to check your principles here, man. Because if somebody could promise me I'm going to make 5 times my money and I have to wait 18 months, I'm like, I'm all in. It's like, that's a no-brainer. So
Right.
it's like, so of course nobody can guarantee that, but these opportunities exist in mining, Chris, and that's what's the message that we have to get out to the generalist. Because the mining investors, I mean, we sort of talk to ourselves, right? And we
Yeah,
look
it's a
ourselves
lot.
up. But we need to somehow get the guys who are investing in the big 7. We need to say, hey, guys, that game is getting tired. Look at those multiples. Don't you want to be getting somewhere where there's some torque that hasn't been found? You're going to have to change your mindset a little bit, but shouldn't you be taking a piece? I mean, I think we're at like 1% of the investable money out there. It's mining. It used to be 10% back in its heyday. 5% was the average. Imagine if we got 5 times the amount of capital in here, what would happen to these stocks? Holy crap.
Back in 1980, when gold and silver peaked, the percentage of mining stock market cap as a whole, as a percentage of the whole of the S&P, was over 20%.
No kidding. Well,
Back
there's a good number. I didn't know that.
It was.
So there you
I'll
go.
tell you what's happened recently, though, and this is a really encouraging place to close, at least for now, and we'll definitely revisit all of these things down the road, Terry. But I don't know if I've shared this with you or not, but every time I talk to a mining executive, especially with projects or trying to get attention in the U.S., the surprising thing in the last couple of years that most people don't know, and I'm on all the different lists, for a registered investment advisor. And if you're a registered investment advisor, a FINRA broker dealer, whatever, you need to take what are called continuing education courses of different kinds every so often to keep your license in good standing, to demonstrate that you at least have half of an idea what's going on in the markets and in the world.
Right.
And it would surprise you, maybe shock you, to see the percentage of these CE classes where you can get credit by going to a Sprott webinar on uranium and nuclear energy, or going to a Van Eck webinar on commodities and emerging markets and things like this. All of a sudden, this is starting to follow already, and it's kind of under the radar so far. And it's going to validate your decision coming to list here on the New York Stock Exchange, because all of a sudden a light bulb has gone off anew over the investment industry in the U.S. It's not a big wave yet. I don't want to overstate it, but the beginnings of a re-engagement with commodities and energy and stuff like that are already evident. The beginnings of this in the U.S. brokerage and advisory industry. And necessity is the mother of invention, and this is gonna build, it's gonna grow. And I'm gonna throw up here on the screen as we close a couple of things. I'll share them with you later. A lot of people say that a theme is overdone when your shoe shine boy or cab driver or these days Uber talks about it. So I've used a couple of graphics in some of my presentations on commodities. Today you have a taxi driver who says, "Hey, did I tell you about all the stable coins and the AI stocks that I bought?" And 10 or 12 years from now, the same taxi driver is going to say, "Hey, did I tell you about all the critical mineral stocks that I bought?" And we will evolve in that direction. I have no doubt of that.
Yeah, sure.
And Canada is going to benefit, I think, disproportionately with the right policies. And if you clean up the capital markets thing up there. So it sure as hell can't get any worse than it was in the last few years. It can only get better.
No, I think we're on the upswing. So that's the positive.
That's good news. Well, Terry, thank you so much. Again, folks, look in the show notes. Among the other things we're going to put there is a link to the interview I did with Terry specifically on power metallic. And we'll be back again, for sure, from time to time, and update you on things.
Yeah, we'll get some assays out over the next we think probably third week in August or so is my guess, and then they'll start to come pretty heavy. So I think mid to late August, and then mid-September. So there'll be lots of news. So,
and I'm excited as hell that you're going to broaden Save Canadian Mining out to Save Canadian Markets. I think that's a great move, because it's not just mining stocks that have suffered from all this same thing.
No, it's not.
Good stuff. All right, Terry, thanks again.
Take care, Chris. Cheers. Take care. Bye.
For much more of the National Investor's cutting-edge content and actionable investment opportunities, make sure to subscribe to Chris's free content at nationalinvestor.com And don't forget to like this video and subscribe to this channel too. Thanks for tuning in, and we'll see you next time.